So the event is live now. You may please start the session.
Okay. Good afternoon to everybody. In fact, TRD is doing very good job. Each and every 15 days or each and every week, depending upon the situation, they will put new topics. And thank you very much to Tax Research Department. And thank you very much to President. We go to Naik sirs and even Vice President TCS Srinivas Prasad sir and Chairman of Indirect Taxation Committee, Ashish Tate sir. Today we will discuss how to maximize the input tax credit. That we will discuss today. Now I will share the PPT. I think PPT is visible.
Sir, PPT is already visible.
Yeah. The thing is, today we will discuss how to maximize the input tax credit. Due to confusion, maybe so many people, they will not take 100% credit. That is one problem. Sometime what will happen? Whatever ineligible credit also we will take, and in future, at the time of departmental audit, maybe department officials, they will disallow the credit. At that time, you have to discharge the tax liability along with the interest and penalty. That is a big hit to our P&L account. Then the thing is, there is an input services. There is an input tax, input on capital goods, and reverse charge mechanism, and input tax relating to RCM. All these things we will discuss today. Then more than that, we will discuss today some important expenses, whether that expenses are eligible or not. That we will discuss today. And some of the debatable issue also we will discuss. All these things I will cover today. Each and every 10 minutes in my webinar, those who are regularly attending, then they know very well. Each and every 10 minutes, I will go through the chat box and whatever your queries, each and everything I will clarify. If possible, depending upon the situation, maximum extent I will clarify each and every query. I am requesting all the members to write your questions in chat box so that I will clarify it. Now we will go back to the PPT. See, today's coverage is essential of ITC under GST, legal provision, eligibility criteria, some important court rulings and recent update, and understanding how business can maximize the ITC. Whenever we are attending the audit, department officials, they will come with the new things. Sir, why this building maintenance is eligible, how it is relating to business, why cleaning material is eligible. All these things are common while attending the departmental audit. But maybe in long run, depending upon the High Court or Supreme Court decisions, we will get a lot of clarity. Up to that, as far as possible, we need to convince the department officials what is furtherance of business, what are the expenses relating to business, and eligibility of the input tax credit. one by one, maybe some of the advanced ruling, important advanced ruling, it will support our decisions. If there is a litigation, better to file the appeal. Depending upon the situation, maybe assessing authority will disallow and appellate authority will allow the input tax credit. Today we will discuss only issues relating to input tax credit. Okay. And sometime what will happen? Even department officials, they know very well all these expenses are relating to business and you are eligible to take the input tax credit, but even then they will not allow it because of their departmental commitment. They will not take any risk. If there is a litigation, they will tell, sir, no problem. If you are so particular, please file the appeal and whatever based on appeal outcome, we will decide. That is what they will tell. But it's all depending upon the situation. From 1/7/2017 to as of now, there is so many issues people are facing and there are many advanced ruling and there is a contradictory advanced ruling, High Court decisions, Supreme Court decisions. One by one issues will settle down. Now, if you talk about input tax credit, chapter 5, eligibility and condition for taking a input tax credit, apportionment of credit and blocked credit, what are all the credits are not eligible, and availability of credit in a special circumstances, taking input tax credit in respect of inputs and capital goods sent for job work, manner of distribution of input service distributor, and manner of recovery credit distributed in excess. I will explain little bit. We will handle case to case basis because see, all these acts and rules, our members are gone through it. Now the situation comes, practical situation comes there. We have to use our caliber. That is very, very important. Now, all these points, eligibility condition, there is a, you are supposed to receive a goods and services. There is a valid invoice and your supplier has to discharge the tax liability and he has to upload his supply. All these basic condition our members know very well. Then apportionment blocked credit. There is a set of rules. Certain items you are not eligible to take the input tax credit and certain items like for personal purposes, staff welfare expenses, these things are not allowed. Then proportionate formula will come. Like if you are dealing with the exempted goods as well as taxable goods, to the extent of exempted goods, you are not eligible to take the credit. For that, you have to apply the proportionate formula. All these things are common. Our members knows very well. But even then, little bit I have explained. Then availability of credit in special circumstances. Some of the circumstances, it is a transitional cases or at the time of registration, how to take the credit, all these things. Then taking input tax credit in respect of capital goods sent for job work. We know very well. If you receive the input and if you send it to your job work, input tax credit is allowed, even for material as well as capital goods. If you receive your material or a capital goods directly to the job worker place, even then you are eligible to take the input tax credit. There is a set of rules within 1 year or 3 years, depending upon the whether it is an input or a capital goods. It has to come back to your principal place of business. That is the condition. Then manner of distribution. Manner of distribution of credit by input service distributor. See, each and every company, depending upon the situation, if they are using a common services, then that services they can distribute to that branches. That is possible. And if there is an excess distribution, you can recover it. All these things are depending upon the situation. See, input allows the business to reduce their tax liability by claiming the tax and paid on inputs. The section 16 to 21 is applicable. We know very well. Earlier there was a value added tax. For each and every value addition, they are supposed to discharge the tax liability. Whatever input on purchases or input services, you are supposed to take the input tax credit. Even in GST scenario, what we are supposed to do for each and every purchases and services received, you are supposed to take the credit. On output, you are supposed to discharge the tax liability. There is an outward supply and inward supply. There, if you plan it properly, you can maximize your input so that you are able to reduce your output tax liability. That is possible. Okay, input tax credit allows the business reduce the GST liability by claiming the tax paid on imports. Till today, I have seen so many corporates, okay, because of lack of knowledge, they are not taking the input on mobile bills. They are not taking the input on cleaning materials. They are not taking the input on building maintenance. Okay, even I know very well, department officials, they are litigating all these things, but it is all well settled issue. You are eligible to take the input tax credit. For that matter, I have seen in some of the big corporate also, they are not ready to take risk on maintenance, on cleaning material and all. They have not taken the credit. But according to my opinion, along with some supporting advance ruling, definitely you are eligible to take the credit. Better to take the credit. Why unnecessary we have to lose it? Okay. Section 16 to 21 deals with the input tax credit. Basic condition for ITC eligibility. We know very well. One is you have to get a valid invoice. Okay, then only you are eligible to take the input tax credit. Then receiving the goods or services, either it is a goods or services. After receiving the goods or services, then only you are eligible to take the input tax credit. Ensuring the supplier has paid the GST and timely filing of GST or 3B returns. Non-compliant with these conditions can lead to the ITC denial. See, last 6.5 years, we have seen lot of litigation. 6 to 7 years, we have seen lot of litigation relating to input tax credit. The people used to argue, I have received the goods, I am having the valid invoice. If the supplier not discharge the tax liability, why unnecessary you want to trouble me? That is what they have put their whatever argument in front of the department. Initially here, all this matching principle 2A and 2B matching with 3B, all this matching principle is not supported by the statutory law. That is why they have come with a circular number 183 for the year 1718, 1819, 1920. If the people are not uploaded the invoice, if you are able to get the certificate from the supplier up to 5 lakh, and if it is above 5 lakh, if you get the certificate from the chartered accountant or a cost accountant, you are eligible to take the input tax credit. Because of circular number 183, we are able to resolve some of the litigation. But once again, if the people are discharged, if the suppliers are live, then only you are able to get the certificate, otherwise not possible. For example, for the year 17, 18, 18, 19, 19, 20, some of the suppliers, they have supplied the goods. Now they have closed their business. But somehow instead of B2B, they have uploaded all their invoices in B2C. Now I am unable to trace out them and I can't get the certificate. Because of that reason, departmental authority, they are disallowing the credit. That is one part. And also departmental authority, whenever they will visit the supplier, they will collect the tax from them. so that they are collecting tax from the supplier as well as recipient. It is a double taxation. That is not correct. In so many cases, if they are able to get the certificate from the supplier, we are able to resolve it. But otherwise also, we have filed the case to the whatever commissioner appeal or joint commissioner appeal, depending upon the central or state. Still, tribunal is not set up, although notification they have issued, but as of now, there is no tribunal. We are waiting for the tribunal. All these issues, maybe somewhere in the High Court or in Supreme Court, it will settled. But so many cases are there. Maybe for that example, Chennai High Court said, because of supplier fault, recipient is not responsible. That type of decision you can utilize, but finally Supreme Court has to decide on these things. Up to that, no doubt at all, there will be litigation that will be there. But after the amendment, now if they upload in GSTR 1 and it comes to the GSTR 2A and 2B, then only you are eligible to take the input tax credit. Otherwise, highly impossible. Okay, now year by year, issues relating to input tax credit regarding matching mechanism almost all solved. Now in future, maybe some of the issues relating to input, we have to handle it in future. Matching, all this matching and all now based on my observation for the year 23-24 or 24-25, almost all it is very less. Up to now, just I will go through the chat box. If there is a question, I will answer it. As of now, there is no question as such. Okay, CM. See, lot of members. Okay, they have written a membership number. Otherwise, there is no question as such. If the member want to ask any question, sir, this slide is blurred. Please adjust the sharpness. Somebody is writing. I don't know. I think it is visible. It is visible. Sir, still it is blurring, or somebody can reply. I think this PPT is okay. Then blocked credit under section 17 part. Just I have given a 2 to 3 example. There is a exhaustive list also. Mainly motor car, unless used for business purpose, or if you are in that business, then only on motor vehicles input is allowed. Otherwise, input tax on motor vehicle is not allowed. For that matter, see the especially motor vehicle, personal motor like a motor vehicle like cars and all these things, it is not eligible. But those transporting, if you are transporting a goods by vehicle like a lorry, all these things, definitely you are eligible to take input tax credit. Okay, personal consumption and certain services relating to personal like LIC and stop welfare, all these things are not eligible. And another safari retreat we will discuss later. This is input tax relating to construction activity. If you want to give a building for rent, that we will discuss little bit later. Supreme Court has upheld the input tax eligibility. Okay, that this is the Orissa High Court decision. Finally, Supreme Court said absolutely no problem. If you are constructing the building for rental purpose or leasing purpose, you are eligible to take the input tax credit. There is no question of immovable. Okay, you are not eligible to take the input tax credit on immovable, but subject to this. Okay, that is what Supreme Court clearly said. In the blocked credit, There is a motor vehicle and personal consumption and all the stop welfare expenses that is not allowed. And if you are taking a depreciation on the tax element, then you are not eligible to take the input tax credit. That means whatever input tax credit, if you capitalize in the books of accounts, you are not eligible to take the input tax credit if you capitalize. Okay, then proportionate credit. Say, for example, if you are dealing with the exempted product as well as taxable product, then you are not eligible to take the input tax credit. But if you are exporting exempted goods, then you are eligible to take the input tax credit. Like that, so many formulas are there in this proportionate credit. 17.5 deals with all these things. 17 is deals with proportionate credit. ITC on capital goods. We know very well. What is capital goods? That is a big question. PPT is clear. Okay, slide is clearly visible. CMA Alak Kumar and all this. No, not a problem. Okay, very good. Okay. Now, there is a lot of litigation in this area. Normally, what department people will do, they will go through the chapter rating 84 or 87, something like that. Straight away, they will tell all these goods are not eligible for credit. You are supposed to reverse it. But it is not like that. Capital goods means whatever you have capitalized in the books of accounts, that only capital goods under GST scenario. Say, for example, you are doing a construction. If you capitalize in your books of accounts, then input on construction is not allowed, subject to SAPARI retreat. That we will discuss later. See, the thing is, so many expenses, what we are doing, we will expenses it because say, for example, there is a huge repair to the building. To maintain the building, you are supposed to spend the huge expenses. Maybe it is relating to cement or steels or something else. Okay, then whatever expenses you are spending, if it is expensed in P&L account, you are eligible to take the input tax credit. No need to disallow it. But all these expenses, if you are capitalized in books of accounts, then automatically you are not eligible to take the input tax credit, that too relating to building. But so many other capital goods are there. Maybe say for example, for software company, if you are buying a laptop, that is also capital goods. You are capitalizing the books of accounts. But for that, you are eligible to take the input tax credit. Whatever capital goods you are capitalizing in books of accounts, if it is an immovable, you are not eligible to take the input tax credit. Now, one by one, we will discuss. Laptop, we are not, it is not an immovable, but it is a capital goods. You are eligible to take the input tax credit. Next is furniture. In furniture, two parts. There is a loose furniture like chairs, tables, all these things. You are eligible to take the input tax credit. But nowadays we are seeing all big corporate, all the workstation, it is erected to the land. Then automatically that type of workstation, you are not eligible to take the input tax credit. But all the chairs, you are eligible to take the input tax credit. To the extent of immovable, you are not eligible to take the input tax credit. But you are producing the books of accounts to the departmental authority. If he is able to analyze what are all capital goods immovable, what are all capital goods are not immovable, then well and good. Whatever you have claimed the input tax credit, he will allow it. Otherwise, argument will start. Maybe you will tell all these furnitures are immovable, I will take the credit. But departmental authority, they are telling No. Furnitures and pictures. It is an immovable because all this interior you have erected to the land and you are not eligible to take the input tax credit. That is why you are very cautious to take the input tax credit. As of now, there is no question as such. Okay, I think people are clear about the concept. Now, in maybe after a few slides, we will discuss the issues. Maybe at that time, maybe I will get more question. As of now, there is no question as such. Reconciliation of GSTR 2A and 2B. These several times we have discussed. We will not spend much time on 2A and 2B, but this is very important. Based on your books of accounts, better to reconcile your all the inputs, whatever appearing in either in 2A and 2B, so that each and every month, if you are able to match it, then risk is very less. Say for example, what will happen? So many reconciliation will be there. Some of the invoices maybe you have not accounted, already it is appearing in 2A and 2B. You are not eligible to take the credit in this month. Maybe in future, whenever you account that bills, you are eligible. Some of the expenses or bills you have already accounted, it is not appeared in 2A or 2B. Then also you are not eligible to take the credit. Whenever it will appear in 2B, then only you are eligible to take the input tax credit. You are having sufficient time up to next year November. Before that, you have to talk to your supplier if he is not uploaded, and better to pressurize to upload it. Then whenever he upload it, you will get the credit. Okay, that is why matching with the 2A and 2B along with books of accounts, that is very important. Sometime what will happen? The supplier will upload it, but all these credits, some of the credit, it is not eligible for you. Now new mechanism, under new mechanism, you have to take the whole credit and whatever not eligible for you, that you have to reverse it. So that department officials, they will come to know to what extent available in 2A, to what extent you have taken the credit. Out of that, if you want to reverse something, you can reverse it. Credit utilization mechanism. This is very old concept. We will not discuss much. IGST credit you can utilize for CGST and SGST. Okay. Like that, in between SGST and CGST, cross utilization is not possible. There is a credit taking mechanism. While offsetting, you have to use this mechanism. Now we will discuss safari retreat, because see, it is a big case. It made a revolution in input tax credit. That is what I want to tell you. What happened? Safari retreat, they have constructed some building and they have given it for rent. And they have taken the credit and they have argued in Orissa High Court saying that even though it is immovable, I am getting the rent on that. I am discharging the tax liability. What ultimately, because of that reason, I am supposed to take the input tax credit. That is the argument they have started. Initially, what we thought actually, even now I am thinking that is a different issue. Okay. What we thought actually, once they allow this input tax credit, then everybody will start. Why factory business is not allowed? Why office building is not allowed? Okay, like that logic will start. Because of that reason, input tax on immovable, probably Supreme Court will not allow it. That is what I have expected. But finally Supreme Court said input tax on all this construction, if you are giving it for rental or leasing it, then automatically you are eligible to take the input tax credit. Maybe in future, All the construction company, what they will do, they will float one company for especially for rental purpose. All the input they will take it, and whenever they will start to get the rent, automatically they will collect the tax and they will utilize the all this input tax credit. That is a huge input tax credit they will get. Maybe another 4-5 years, maybe there is no tax liability that they can do it. That is relating to construction company, what they are constructing. In future, maybe even individual, if they want to construct some building for rental purpose, even they are also eligible to take all this input tax credit. And what they can do in future, whenever they are collecting the rent, they are able to adjust it. This is in future way of construction will happen. No, that is altogether different, because earlier it was either they are paying 28% or 18%, it was cost. Now it is not like that. All this input we are eligible to take the input tax credit and you can utilize for payment of output tax liability. That is possible. Okay. Maybe little bit planning is required. That is one part. Maybe in future, other corporates will also start to argue, I am constructing a building for manufacturing purpose. Whatever I am manufacturing, on that I am discharging the tax liability. Hence my input on building also allowed. And some hotel industry, they will also start to argue. Say for example, all this hotel business, whatever I am getting GST, okay, for constructing hotel, I will take the input tax credit. Some argument will start, maybe some more litigation will come in future based on this Supreme Court decision. I don't know whether government want to commit an amendment or otherwise they will allow it. I don't know. It's all depending upon the situation that we will wait and see. But this Sapari Retreats Privately Supreme Court decision made a big revolution. Maybe in future, lot of people will take some additional credit due to this decision. Maybe there is a lot of litigation relating to construction activity will happen. That is what I am expecting. God only knows. Then ITC on motor vehicle. Okay, say for example, ITC on motor vehicles is not allowed, but if you are using for a transportation and logistic purpose, it is allowed. Job work we will discuss. Now question has started. Very good. No problem. Sir, one of my client is a doctor. He is purchased endoscopy machine costing around 49 lakhs, including GST. Can we eligible to claim the input tax credit? Sir, see, the thing is, healthcare services is exempt from tax. CMA Dipankar sir, okay, try to concentrate. Healthcare services is exempt from tax. If he is not collecting GST, then he is not eligible to take the input tax credit. But certain specialized services, even it is a healthcare services, then automatically it is taxable. Say for example, you are telling a endoscopy machine, then automatically that whatever they are doing, scanning, all these things, it is taxable. Then he is eligible to take the input tax credit while discharging the output tax. Definitely he can utilize that input. Okay, on endoscopy machine, he is eligible to take the input tax credit. Supplier become the insolvent and out of cash to pay GST. Whether in this condition ITC can be avoided? Sir, CMA Kamal sir, your question is not clear. Supplier become an insolvent and out of cash to pay GST, whether in the condition ITC can be avoided. Supplier become insolvent and out of cash to pay GST, whether in this condition. Sir, if the supplier is insolvent, absolutely no problem. Whether he has uploaded your input or not, that is important. Whether he is a solvent or insolvent, that is not the criteria. Whenever he is supplied to you, whether he is uploaded or not, whether he discharged the tax liability or not, that is very, very important. CMA Kamal sir. When you say ITC not available on works contract, means It covers a LAN cabling done, computers, AC installed, which is part of the entire interior work contract given to conductor and renovation. Sir, that is what I am telling. Say, for example, when say ITC not works contract means it covers the LAN cabling done by the computers. For LAN cabling to the computers, definitely it is allowed because works contract to the machinery is allowed. AC installed, which is part of the entire interior work. AC installed is a works contract. On that, definitely input is not allowed. Okay. Now, once again, we will go back to PPT. Sir, definitely AC, split AC is eligible for input. Cables all relating to that, it is allowed. But AC installed, if it is an works contract, definitely, because see, some of the AC, centralized AC and all, definitely input is not allowed, sir. Under section 119 ITC available for job work, say normally, in case of job work, what we are doing, we are getting the material and we will send it to the job worker. And even some capital goods also we are sending to the job worker. Both the input and capital goods, whenever you are sending to the job worker, it is allowed. Say, for example, for that you have to follow the procedure that is called ITC4. Each and every item, whatever you are sending to the job worker, you are supposed to upload to the website. Whenever it will come back also, you have to upload. If it is within the time period of 1 year and 3 years, depending upon the whether it is input or capital goods, absolutely no problem. You are eligible to take the input tax credit. Otherwise, if it is not come back, then automatically you are supposed to discharge the tax liability. In so many industries, ITC4 they are not taking seriously. That is why I am advising to our members better to go through it. If they have not filed ITC4, please tell them to file a ITC4. Please make a reconciliation. All the inputs or capital goods, whether it has come back within 1 year or 3 years, that you need to verify. Otherwise, maybe in future they will create a huge liability. Okay, that is relating to job work and ITC. But sometime what will happen? Some of the material directly you will your supplier will deliver to the job workplace. That is also allowed. For that also you need to upload the ITC4. Even though you have not received the material in ITC4, you have to show the receipt and whatever you are sending to job workplace, that also you have to mention. Whenever it has come back, that also you have to mention. Sometime what will happen? Job work, from job work place only you are raising the invoice, that is also allowed. Okay. Now ITC on imports, goods and services. See, ITC on imports, whenever you import the goods, you are supposed to discharge custom duty as well as IGST. Both are not eligible for credit. Only IGST is eligible for credit. Basic custom duty will go to the cost. Whatever you are discharging IGST, you are eligible to take the input tax credit. But in the case of service also, if you receive any services from abroad, you are supposed to discharge the tax under RCM. Once you discharge the tax under RCM, you are eligible to take the input tax credit. Okay, but within due date, better to discharge the tax liability. Tax liability in the case of service also better to take the credit, because now Act is amended. Within 30 days, you are supposed to raise the self invoice. Earlier, because of all this litigation, whatever secondment relating to secondment, now they have allowed in case of self invoice, there is a time period whenever you are discharged the tax liability. Okay, at that time only, if you are raised the self invoice, absolutely no problem. Now it is Act is amended, within 1 month you are supposed to raise the self invoice. It means in future you can't take that benefit. If you receive the service now within 30 days, you are supposed to raise the self invoice and you are supposed to discharge the tax liability. But up to now, due to secondment, if the people, secondment means if the employees are deputed in India from from abroad, that is treated as a import of services. People are discharged the tax liability. For all of them, we have taken the credit now. Department people they have allowed because government has clarified in the case of RCM, self invoice is the basis for taking the credit. But what happened? Now government has realized after 3-4 years, if somebody raise the self invoice, then automatically they are eligible to take the input tax credit. Earlier there was no time limit to raise the self invoice, but now within 1 month you are supposed to raise the self invoice. See, the thing is recent amendment because of whatever 2B and all, now it is constant. Okay, so many circulars and notification that has protected the input tax credit, because see, the thing is before 2020 there was an argument, even if people are not uploaded I will take the credit, but now it is 100%. Somewhere in February, somewhere in 2022 it is 100%. If it is in 2B, then only you are eligible to take the credit. Advance ruling play a crucial role interpreting the ITC eligibility specification. Mohit Minerals here ruled that ITC claimed ocean freight providing a guidance for industry global trade. Mohit Minerals, we know even they are having advance ruling as well as Supreme Court decisions. Okay, ITC eligibility. Whenever you are discharged the tax liability, you are eligible to take the input tax credit as of now, but in future that is not possible. Common ITC descriptions. ITC often arrive due to mismatch in 2A, where the supplier failed to report the sales properly. Circular number 135, how to do it, everything, all matching, everything it has explained. Now people know very well. Reversal of non-payment to supplier. Some more questions are there. We will discuss and we will go next. The works contract service for construction of plant and machinery, is it compulsory to be capitalized? Sir, no doubt. Normally people are capitalizing works contract expenses relating to machinery. But if it is a works contract expenses relating to machinery, definitely input is allowed, no doubt at all. CCTV purchased for new offices. Sir, CCTV input on CCTV is allowed because that CCTV easily you are not erecting in a building. That is why input tax on CCTV is allowed. Sir, training fees paid for an employee bank, for exam fees paid by eligible for definitely training to the employees is eligible, sir. Kamal sir, supplier become insolvent and out of cash to GST. In this condition, ITC can be availed, sir. I have replied that. Sir, nowadays with respect to furnitures and picture purchased in a block, like for example, if somebody purchased chairs along with the permanent picture like cupboards, do you have a take invoice along with the item wise? That is why, sir, my advice, Sri Krishna sir, my advice is better to take the 2 invoice. For all use in furniture, better to take in 1 invoice, and pictures better to take like cupboards and wardrobes, better to take another invoice, so that all the loose furnitures it is eligible for input tax credit. Sri Krishna sir. Okay, 52,149 membership number. Sir, training fees paid to the employee by a bank for exam fee eligible for ITC, definitely, sir. Okay, whenever you are paying a training fee, only thing is in bank they are having a 2 option. One is proportionate discharging the output tax liability, because they are having a lot of exempted service as well as taxable service. If they are discharging the tax liability proportionate basis, only proportionate credit is allowed. Otherwise, training is allowed. Sir, under RCM, in case of unregistered dealer, raising a self invoice is mandatory. Sir, whenever you are buying a service or a goods from unregistered dealer, self invoice is mandatory, sir. Okay. As of now, I have replied each and every question. Now I will go to the PPT. See, 180 days condition we know very well. If you discharge the creditor's payment within 180 days, well and good. Whatever you have taken credit, you will continue with that credit. If you not discharge the whatever supplier payment within 180 days, you are supposed to revert the input tax credit. In the normal course, what will happen? Nobody will realize whether you have made the payment after 180 days or before that. That is why people are ignoring this section. That is very, very dangerous. That is why whenever you are making the payment after 180 days, say for example, after 9 months, if you make the payment for that 3 months, better to calculate the interest and discharge it. Okay, say for example, now I am attending the assessment of 2021 or 21-22. If the invoices are having more than 180 days credit period, for that period, better to calculate the interest and discharge the interest. Otherwise, at the time of assessment, what they will do, they will create the interest. But some of the officers, they are arguing, no, I will disallow whole input tax credit. That is highly impossible. Only time period from 180 days to balance period, you are supposed to discharge the interest. That is what my opinion, it will work. ITC on real estate and construction. Section 17.5 disallow the ITC on construction service except in specific case like real estate development for sale. The Sapari retreat ruling, however, provides the important exception for developers claiming ITC service related to construction complex shifting landscape for the construction industry. Now, due to this Sapari retreat decision, maybe builder, if they want to construct the building for their rental purpose, they can take the credit. And if they want to resell it, absolutely no problem. They can take the credit. Honorable Supreme Court has delivered the much awaited final judgment of the Sapari Retreat Private Limited on October 3rd, 2024 in a landmark ruling. Honorable Supreme Court of India permitted input tax credit on construction expenses building meant to be lead and renting. That is what this one say. We know very well. If it is an immovable, we are not eligible to take the input tax credit. But in the case of builder, during the course of construction, if they receive any amount, then automatically they are supposed to discharge the tax liability. Okay, and they are eligible to take the input tax credit also for commercial building. For residential building, concessional rate of 5% tax is there. There is no input tax credit. But in the case of construction, if you want to give it for rent, then automatically you are eligible to take the input tax credit. Okay, this business can claim an ITC lease payment made to the business premises, but this depends on the nature of the lease and its linkage to the business operation. Recent advance ruling have clarified the eligibility advance ruling as well as Sapari treaty. And reverse mechanism RCM, the RCM mechanism under 9.3 and 9.4 tax liability from supplier to recipient, ITC can be claimed on the tax paid under RCM, ensuring that business do not face additional tax burden transacting with unregistered and overseas suppliers. That is why whenever you are dealing with the 9.3 and 9.4 cases, 9.3 is a listed services and goods. 9.4 is from registered dealer. Nowadays, after amendment of this commercial rental and all, 9(4) is also very, very relevant. Otherwise, all these years it is absolute. Now 9(4) is also playing very, very important role. If you want to give a commercial complex on rent, automatically it is, if you are not registered, automatically those who are taking that premises, they have to discharge the tax liability. Then ITC offline lead to dispute, we know very well. There is a lot of dispute in ITC came. That is why better to whatever documentation is required, better to do it. Okay. Now we will go to employee related expenses. ITC claim on employee related such as welfare programs, canteen services, gifts are generally bureaucratic. However, there is an exception where such expenses deemed to be essential for business operation and business should keep track on relevant rulings, make informed ITC claims. Say, for example, some of the transportation, it is mandatory under Factories Act. Then automatically you are eligible to take the input tax credit. Otherwise, transportation is not allowed. Some of the ITC related to stop welfare expenses also, if it is a mandatory in some other act, Factories Act or some other act, you are eligible to take the input tax credit. Otherwise, you are not eligible. ITC reconciliation, best practice. This one we will not discuss much. Now, I have listed how around 7 to 8 issues, one by one we will discuss whether it is allowed or not, why it is allowed, all these things. Building maintenance. See, we are also handling lot of cases. Whenever we are going to the department people will ask, sir, how it is related? You are, say for example, I am manufacturing I am in an automobile industry, I am manufacturing a car. Automatically, I have to maintain my building, I am spending the building maintenance. Then department people are asking, this building maintenance, how it is related to your product. Okay, for car manufacturing, why building is maintenance is required? That type of whatever illogical question they will ask. Okay, and some software industry. Sir, you are developing software, how it is building maintenance is relevant. That is why in my article recently, I have written one article, furtherance of business. What is furtherance of business? It is a big question. Okay. According to me, whatever business expenses, everything is furtherance of business. But according to department people, they will tell, no, this expenses is not relating to furtherance of business. Automatically, furtherance of business is a big question. Okay, logically you have to prove it. There is no hard and fast rule. There is no definition in GST Act. All these things are furtherance of business, or these things are not furtherance of business. But see, logically, whatever relating to furtherance of business, subject to 17, section 17, all other things, you can take the credit. Regarding building maintenance also, the GST paid on works contract for carrying out repair factory bill shall be available for ITC, subject to if it is not capitalized in the books of accounts. Advance ruling Tamil Nadu, JK Penner India Private Limited, they said clearly, for building maintenance, if you spend some money, okay, then automatically you are eligible to take the input tax credit to run your business, to manage your show. Building maintenance is mandatory, otherwise not possible. Maybe now people are asking lot of question because training fees paid for an employees by bank fees will be eligible for. Regarding bills accounted, availed and rewards can be paid till what time avail the ITC? Is there any time same upload the bills? Not sir, see, that is what I am telling. For the year 23-24 up to 31st October, another 12 days. Okay, because the time is 30th November, but 31st October return you are filing on 20th November. Hence, up to 30th October of 2024, you are eligible to take the input tax credit time limit. Definitely regarding training fee, you are eligible to take the input tax credit. Sir, can you please explain input tax credit for export of goods with tax and without tax? Definitely. ACMA Bhavani. Madam, see, you are having a two option. If you are having a export, what you can do, you are eligible to take the input tax credit. On export, you are not discharging the tax liability against LUT, you are sending the your goods for export. Then whatever accumulated input tax credit, you are eligible to claim the refund. You are having another option. On export, you are discharging the tax liability by utilizing the input. If there is a difference, you will discharge through cash. That amount also you are eligible to take the refund. For exporter, they are having a both option. First option is accumulated ITC, they can claim the refund. Okay, without discharging the tax liability on export. Second option is whatever export, on export they can discharge the tax liability by utilizing this input as well as cash ledger. Finally, whatever they have discharged the tax liability, they are eligible to claim the refund. Bhavani madam, if you are having any other query, please ask. Otherwise, maybe I have made it clear. That is what I am thinking. Okay, I will go to next slide. As of now, request you to repeat the ITC on works contract 11,214. Membership number 11,214. Okay. Sir, see the ITC on works contract. ITC on works contract like building construction or whatever construction you are doing, not eligible for credit if it is an immovable. ITC on works contract eligible to take credit if it is not immovable. If you are not capitalized in books of accounts, then you are eligible to take the input tax credit. If you are having any other question, membership number 11,214, I will answer it. Okay, as of now, there is no other question. We will go to next slide. Building maintenance. This is very important area. Always, whatever I am handling, at least in 30 to 40% of the cases, department officials are disallowing the credit, but I have filed the appeal. One appeal is in favor of me. Okay, there they have clearly told what is capital goods. If the expenses are capitalized in books of account, then only it is capital goods. Hence, you are eligible to claim the input tax credit on building maintenance. Repairs and maintenance, we know very well. Lot of repairs and maintenance we are doing. Okay, maybe repairs and maintenance to building, repairs and maintenance to furniture, building maintenance, all these things. Same logic will apply. We can avail the ITC on building repairs and maintenance, but ITC will not be available to the extent of capitalization. This I have made it very clear. Then all these 2 to 3 example I have given. ABC Limited paid GST on building materials such as cement, marble, paint and other building materials meant for repair and building. ITC will be allowed if they are not capitalizing the same. ABC hires the labor to carry out the building repairs and maintenance work where the material is provided by ABC Limited. It will be allowed only labor supply if they are not capitalizing the same. ABC Limit hire the contractor for complete the work for building repair and maintenance where the material as well as labor provided by the contract. ITC will be allowed if they are not capitalizing the same. All the works contract, all the building and maintenance, all these things, if they are not capitalizing, you are eligible to take the input tax credit. repair work related to electric installation and sanitary fittings. Why I am giving all this example? To get the clarity so that at the time of assessment, these expenses is allowed or not. All these things we are able to analyze. All the critical points, all these things are critical points. Maybe those who are attending regularly to the department, they will realize, okay, repair work related to electrical installation and sanitary fittings. Once again, same logic. We can avail the ITC on electrical fittings such as switches, cable, MCB and other electrical consumable meant for repair and electrical fittings. So many officers, they are disallowing this credit. You have to be very careful. Definitely all these expenses are allowed, but ITC will be not available to the extent of capitalization. Same logic. Okay, it clear implies that we are not capitalizing. We can claim the ITC on repair work related to electrical installation and sanitary fitting also. For example, ABC Limited paid the GST on repair work electrical fittings. ITC will be allowed if they are not capitalizing the same. ABC Limited paid on sanitary fittings such as tiles, wash basin, PVC pipes and other bathroom sanitary fittings meant for repair of existing sanitary fitting. ITC will be allowed if they are not capitalizing the same. Okay, up to this very clear. Then we will go to furniture and fixture repairing work. Two parts, furniture and fixture purchase. Okay, there also furniture is allowed. Input on furniture is allowed. Fixture is not allowed. Now we will go to the furniture and fixture repairing work. We can avail the ITC on wood, paint, polish and other consumable meant for repair and existing furniture and fixtures. Okay, that is input tax allowed. But ITC will not be available to the extent of capitalization there also. Okay. Then, for example, ABC Limited paid the GST for renovation of their old conference room. ITC will be allowed if they are not capitalizing the same. But here two types. Fixtures. On fixtures, if you spend any expenses, okay, if it is not capitalized, allowed. If it is capitalized, not allowed. But on furniture, if you are spending some expenses, even if you capitalize, it is allowed on loose furnitures. Repair and furniture repair work, whether you are capitalizing or not, definitely allowed. ITC available on loose furniture. Temporary construction expenses not capitalized in the books of accounts. Okay. Say, for example, some of the temporary construction for 6 months to 1 year you will construct. It is a temporary structure. You will not capitalize the books of accounts. Okay. Maybe it is a big expenses of 8 to 10 lakh. But the time period is one temporary shed you are constructing for only 8 to 9 months. You are not capitalizing that in books of accounts. Then automatically you are eligible to take the input tax. However, where the construction not capitalized in the books, the claim of ITC is admissible. Act restrict the input tax credit construction of which deals with the original construction, and if it is immovable, okay, temporary construction is allowed. Then next question is printing and stationery. CMA, yes, Praveen Kumar. ITC on work which is necessary for installation of plant and machinery. Can I take the ITC work contract portion while capitalization of plant and machinery? Sir, CMA Praveen Kumar, sir. If you recall the central excise, okay, Sirpur industry, there is a leading case. Even during the before introduction of the GST, even during the central excise period, they have allowed the SENVAT. Whatever SENVAT relating to installation of plant and machinery like steel, cement, whatever, all these things. Even now, for installation of machinery, if you prepare a groundwork, If you spend any amount for steel or cement, then input on that is allowed. Praveen Kumar sir, if you are having some other logic, please tell me. Otherwise, ITC on work contract, which is necessary for installation of plant and machinery, is allowed. Okay, definitely allowed. Their capitalization is logic will not work. Whether you will capitalize or not, it is allowed. Absolutely no problem. I think Praveen Kumar, I think it is clear. Okay. Then can ITC available on building the weight bridge and for steel industry? Okay, sir, wave bridge is a machinery. According to my opinion, once again, okay, wave bridge is a machinery. Definitely, ITC on wave bridge is allowed. Hariharan Goyal. Okay, whether ITC is allowed on centralized AC? No, sir. On centralized AC, ITC is not allowed. Sir, can you explain the input tax export with or without tax? Madam, you are asking same question. Okay, once again, I will explain to you. Okay, if you are having any specific query, please reply once again. See, if you are an exporter, you are having a two option. One is with input tax credit, whatever you are supplying or whatever you are exporting without payment of tax against LUT, you are send it to abroad. It means for export, there is no tax liability. It is a zero rate. Against that, you are eligible to take the input tax credit. Okay. Then whatever accumulated input tax credit, you are eligible to claim as a amount. That is called without tax. With the tax means what you can do on export, you are charging the tax. Okay, you are discharging the tax. You are not charging to customer. You are discharging the tax. Maybe by utilizing the input tax credit or through cash ledger. That amount you are claiming as a refund. That is why input tax of export goods with the tax and without tax. That is the concept. Praveen Kumar, ITC on why which is necessary for can I take ITC work contract portion while capital? Definitely, sir. I have replied, sir. Thank you, sir. But department people are not allowed. Okay, sir. We will fight it out. Absolutely no problem. Okay. This ITC on was contract relating to machinery. Definitely it is allowed. You can quote Sirpur industry old cases also. Some of the old central excise cases also you can quote it. Absolutely no problem. Bhavani madam, now it is very, very clear. Absolutely no problem. We'll go to next slide. Printing as stationery. Input tax credit is eligible on stationery if it is used in the course or furtherance of business and the final product is taxable. Here, furtherance of business is a big question. Always department people, why it is printing and stationery is required for your business. All these things they will argue. No need to bother. For printing of your taxable invoice, the required printing and stationery is required. Envelope printing and stationery is required. Okay, like that for each and everything printing and stationery is required. You are eligible to take the input tax credit, no doubt at all. Okay. Next, sales promotion expenses. People are facing a lot of problem here. Okay. That we will discuss little bit. In respect of input tax credit, clarified that the supplier shall be eligible to avail that input tax credit on capital goods and services which is used in relation to the supply of goods or services or both on such a discount. Say for example, discount is allowed, no doubt at all, but at the time of supplying the goods, you have to know what type of discount you are giving and how much discount you are giving. All these things you have to have a proper agreement, then only discount is allowed. Otherwise, proportionate disallowance will come. That is the problem. Now, say for example, what you will tell. Say if you take this much of volume, I will give a 2% cash discount, whatever volume discount. If you pay immediately, I will get 2% discount, cash discount. All these things are common. That discount is allowed. No need to reverse the input tax credit. Okay, this is regarding discount. Lot of other varieties of discount will come. each and every discount is allowed subject to, you have to note that discount at the time of supply of goods and you have to have a proper agreement. Then only discount is allowed. Last 20 minutes is there. I am having only another 2 to 3 slides. Okay. People are having questions, anything related to input tax credit, please ask. Okay. Now treatment of pre-sample and gifts. Supply. The term supply depends section 1, central goods and service subsection 1. Supply includes all forms of supply when agreed made for a consideration. Thus, pre-sample and gifts are supplied without any shall not be treated as supply under GST. That is why pre-samples, whenever you are giving a pre-samples and gift, proportionate input tax credit, you are supposed to disallow it. Say, for example, what you are doing, whenever customers comes, you will give 1 or 2 items to them. Okay. Maybe you are having 1,000 in stock. You are having 1,000 rupees input tax credit. If you give 100 or 50 on pre-sample, to that extent, you have to reverse the input tax credit. Okay. Thus, pre-sample and gifts which are supplied without any consideration shall not be treated as supply under GST. Automatically, you are supposed to reverse the input tax credit. The 17.5 clearly states that input tax credit not available in respect of pre-samples and gift. Okay, section 17.5H, it is clearly tells. Thus, the supplier pre-samples gifts will not be able to avail the input tax credit in respect of inputs, input services and capital goods to the extent they are used in relation to pre-samples and gift supply without the consideration. That is why whenever your assessee is having that type of agreement with any customer, you have to be very careful, or otherwise you have to make some other arrangement. Otherwise, you are supposed to discharge the or reverse the input tax credit, and you to that extent, you have to discharge the tax liability. Then sales promotion. Treatment and buy one, get one free. This is very, very common. What they will do? If you buy one shirt, they will give one free. If you buy 2 shirts, they will give one free. That type of arrangement is common, especially Diwali discount, Deepavali discount and year-end discount, New Year discount. Just like that, it is a selling technique. Okay. But at that time, whether whatever free you are giving, to that extent, you are supposed to reverse the input tax credit or not. That is a big question now. People are facing the problem. Maybe some litigation will be there. In case buy one get one free, one product is being supplied to free of cost. Actually, in the buy one get one free, there is no individual produce being supplied free of cost. In fact, 2 or more individual products supply at a single price. In simple terms, 2 or more products is supplied at the price of one product. Then automatically, no need to reverse the input tax credit. Why you are giving another one? Because he is buying one. Whatever all the prices I will upload here only. Due to that reason, you are eligible to take the input tax credit. No need to reverse it. It has been clarified by the CPIC in the above referred circular that the taxability of the buy one get one free supply would be depending upon the supply being composite supply or mixed supply, and rate of tax should be repaid as per the section 8. Input tax credit. Supplier shall be eligible to avail the input tax credit, input services and capital goods which are used in relation to supply of services or both. That is why if the sellers is having that type of arrangement, absolutely no problem. Okay, they are eligible to claim the input tax credit. Sales promotion. Input on traveling. See, the lot of people, they are facing lot of problem. Whenever they will travel, whether that IGST or CGST, SGST, whether they are eligible to take the input tax credit or not. The problem here is, if you are able to get the IGST bill, if you are in a Karnataka, you are going to Bombay. Then if you are able to get the IGST bill, then only you are eligible to take the input tax credit. If you are registered in Karnataka, if you get a CGST, SGST of Bombay, you will not eligible to take the input tax credit. That is why always you have to make an arrangement to get the IGST bill through traveling agent or somebody else. If you are traveling for a business, you can claim the GST on air tickets and input tax credit for your business. Offline traveling agent will issue the reimbursement cum tax invoice for a travel ticket amount paid by them, including their booking charges and GST. The situation in this situation, GST on input tax credit will be claimed for both the transport department as well as offline travel agent. Say for example, even air ticket and his charges both are eligible for credit. You can take the credit. That is possible. That is possible. Okay, that is why. See, so many issues here. One is travel bill relating to air ticket or all these things. Another one is lodging. Even lodging bill also it is allowed, subject to if you are traveling booking agent will book, no, automatically you will get the IGST bill. You are eligible to take the input tax credit. Only another 2 slides are there. Okay. Then I will close it. Before that, if you are having any question, I will clarify. CMA. I installed a solar plant on roof and I classify under plant and machinery. 100% power generated from solar plant was self-consumed. This power is 100% utilized production of manufacturing of my finished goods. Can I take the ITC while capitalizing the solar plant? CMA Pawan Kumar sir, definitely on solar plant you are eligible to take the input tax credit. Whether you want to consume that electricity by yourselves or if you want to sell it, that is not the criteria. You are eligible to take the input tax credit. Okay, even though it is immovable, it is a solar plant, is a plant and machinery, you are eligible to take the input tax credit. Then any gift scheme given to the customer post sale is eligible for ITC. Sir, that is what I am telling. Whatever discount or gift at the time of selling, if you are matching with your selling price, then only it is allowed. Free gift is not eligible for input tax credit. That is why what you have to tell, my selling price, it is already included. It is just my selling technique. That is what you have to prove it. Then only you are eligible to take the input tax credit. Sir, regarding export, Devendra sir, regarding export, what sir? 1 minute. Can we claim the duty drug benefit on export? Manual shipping bill we have done from Vizag. Manual shipping bill is approved by customs. Sir, this mechanism, manual or electronic shipping bill, that is just mechanism, absolutely no problem. Duty drawback, you can claim it, but duty drawback mechanism, I don't know much. I don't have much exposure. Material sent of naval vessel under manual shipping bill is approved by the customs. Okay, very good. Then CMA Anand Kumar, sir, why ITC is not available for the composition taxpayer? What is the logic behind this? Sir, Anand Kumar, sir, say for example, you are eligible to take the input tax credit only if you collect the tax, otherwise it is not possible. Whenever composition dealer will give the invoice to the customer, they are not eligible to take the input tax credit. Automatically, at the time of composition dealer, it will stop it. The logic behind this is composition dealer, he is paying the tax at a concessional rate. That is why he is not eligible to take the input tax credit. Another logic is, see, you are paying small amount of tax and whatever you are getting input, automatically it is cost to you. Because of that reason only, government has given a concessional rate of tax. Okay, that is the logic. Anand Kumar sir. Sir, training fees paid to the employee by a bank exam bank or a exam fees paid will be eligible. Exam fee, okay. Sir, at present we do not have mechanism take e-invoicing IRN, but we claim the ITC only when it matches to 2B. Means vendor has paid tax correctly. Whether the department may disallow the ITC even if e-invoice IRN requirement are not even aware who is crossing the threshold limit of 5 crores. Sir, that is why. See, the thing is nowadays, if you cross a 5 crores, e-invoice is mandatory. In the website, we are able to trace out. Okay, whether only thing is that mechanism we are not having. That is what you are telling. But see, the thing is, whenever they issue the sir, at present we do not have a mechanism check e-invoicing or IRN, but we claim the ITC only if it matches to B. Vendor has paid tax correctly, whether the department may disallow the ITC e-invoicing or IRN. Sir, see, that is what. Now, if you get a credit in 2B, you are eligible to take the input tax credit. Okay, only if the invoice is mandatory, maybe they will disallow. Now there is no mechanism. In future, they will come with a mechanism. You are able to trace out. That is possible. Are companies required to pay GST under RCM mechanism for transaction in securities? Madam, Sridevi, madam, definitely transaction relating to security agencies, it is covered under RCM now. Now, input tax on mobile bill. To claim the ITC on our mobile phone purchase and recharge, both are eligible for credit. But to what extent you have used for personal use and what extent we are used for business purpose, it is really difficult to trace out, even department people or for us also. That is why it is a once again it is a litigation. But what I am telling, even you can tell to the department, sir, whatever our mobile and this recharge we have utilized for only business purpose. Nowadays, we know very well whether you have used for business or personal purpose. Consolidated amount of 500 or 300 rupees per month we are charging. I think it will not make any difference, but even then, the rule is rule. If it is using for personal purpose, it is not allowed for credit. If it is using for business, it is allowed. Earlier, before introduction of the GST under central excise scenario, initially they have not allowed even landline also. Then subsequently, slowly they have used to allow landline bills. Then mobile initially they have not allowed. Subsequently they have allowed. Even in GST scenario, some of the officers they are asking, sir, mobile bill is not allowed. Then I told it is for business purpose. Then he has asked, sir, we don't know how to trace out to what extent you used for business and to what extent you have used for personal purpose. Then I told, sir, see, we are using for business. Maybe 1 or 2 calls, maybe their personal use, that is you can't trace out, even I can't trace out it. That is what we have argued. But it is once again debatable. It is very difficult to tell my mobile I have not utilized for personal purpose. I have only for business purpose, but even then department they are supposed to allow, because very difficult to trace out whether I have used for business purpose or personal purpose. Only call record will tell all these things. That is highly impracticable to trace out. That is why time being better to take the input tax credit and enjoy it. Department will not question it. ITC eligible on input used for construction foundation of machinery. Authority of Advance Rajasthan advance ruling. Okay. Versus UV Glass Private Limited. It is eligible. Earthwork for plant and machinery. Somebody has asked, if you want to quote solar plant and earthwork for plant and machinery, even though government is debating, people can refer this advance ruling. That is possible. Okay, now some more questions. I will hand it. Solar. Sir, Pawan Kumar, sir, now I am showing this advance ruling. It is helpful for you. By quoting this advance ruling, you can argue it. Okay, solar plant, that is possible. Okay, but department condemns that power is self-consumed, so they are considered as self-consumed. Sir, see, the question is whether it is a self-consumed, whatever it may be, we are using for business. By using that power, you are producing taxable item. Hence, it is allowed, sir. Absolutely no problem. Department condemns that power is self-consumed, so they are considered as a self-consumption. Even it is self-consumption, you are producing a taxable goods. If you are producing exempted goods, then definitely not allowed. Otherwise, you are eligible. Can a taxpayer avail the GST ITC goods like office supplies or stationery? Definitely, sir. You are eligible to take. Only services are eligible. No, not like that. All the office supplies, stationeries are eligible. ISD, sir, ISD is input service distribution is totally different. But for ISD, these services are not eligible. ISD, only common services you are distributing. Okay. With this, today I will close my session. Thank you very much to President and Vice President and TRD officials and all the members, those who have attended. Okay, thank you very much once again. If you are
Thank you,
having
sir, for your time and your valuable inputs. We look forward to many such webinars from you, sir. Thank you so much.
Thank you very much, madam. Another 4 minutes is there. If the people are having question, I will reply it. Otherwise, I will close it.
Okay, sir. Okay. Kindly continue.
Okay.
Thank you for your time, sir.
Okay, thank you very much. Dear members, if you want to ask any question, you can ask. Another 3 minutes is there. Sir, regarding Pawan Kumar question, I will give little more explanation. Sir, see, the thing is, either it's a product or a services, absolutely no problem. If you are having a self-consumption, final product is taxable or exempt. That is one part. If the final product is taxable, absolutely no problem. You are eligible to take the input tax credit. Second part is, if the final product is exempted, if you are exporting, then even then also you can take the credit. That is possible. Okay. Now, okay, share the PPT. Sir, we are not sharing the PPT. We are uploading this PPT in website along with my presentation. Everybody can enjoy it. That is possible. Thank you, sir. Very good session. Okay, with lot of inputs and insight. Very good. Excellent presentation. Thanks. Wonderful. Okay. Okay. If the people are having question, I will reply it. Otherwise, I will close it. Thank you very much to once again each and every member. Okay. Shortly, I will come with another webinar. Thank you very much.
Thank you, sir.
Okay. See you. I will leave now.